Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to continue our lesson on inventory valuation using the Fifo and the weighted average method. And we are going to solve a question that involves profit estimation. Remember that the last time we learned how to value inventory based on the first in, first out, and then the weighted average method. And we solved example using both methods. And we came to understand that even though the closing stocks for the two methods were the same in terms of a quantity, they were not the same in value. We realized that the FIFO method gave a higher closing stock value than that of the weighted average method. And so we are going to solve another question today. Now, I told you that the purpose of using the FIFO and LIFO method for stock pricing is just because we want to find out which one, for decision-making purposes, which one will give us a higher profit in terms of the income statement. And so we are going to solve, this is a past question from the Institute of Chartered Accountants, Ghana, and we are going to solve it, and then we'll use that as a basis to understand how we'll be able to do this FIFO-LIFO stock pricing method, and then proceed to prepare profit statements using both closing stocks to see which of the two methods will give us a higher profit, and then management will be aided to make their decisions. All right, so without wasting much time, let us look at the question. Grain Dealers Limited is in the business of buying farm produce in bulk from outgrowers for onward sale to manufacturers. In view of the huge volumes of receipts and sale transactions, the company is unable to use the specific pricing method for valuing inventories. The company needs advice on the impact of profit of using the FIFO or weighted average methods of inventory valuation. The following data has been extracted for the month of October 2019 for use. So we have inventory balances as at 1st October 2019. That is 800 units and it's at 4 Ghana cedis per unit. Then we are told transactions during the month to 31st October 2019 are as follows. So these are the transactions. So you see that we have a table and you can see dates, purchases and sales as the main headings. And under purchases, we have quantity and price. Under sales, we have quantity and price. Now, make no mistake about that. The purchases you see here refers to the receipt of inventory, and the sales is the same as issue. But they are using purchases and sales. So we are going to use that, and that is going to help us to do what we have to do. So let's look at that. We can see that on the 5th of October, there was a purchase of 1,200 quantity of the goods for 5 cedis as a unit price. On the 10th, there was sales of 1,500 for 8 cedis at a price of 8 cedis. Then on the 12th of October, there was purchases of 1,500 for 6 cedis. And then on the 15th, another purchase, 1,800 at a unit price of 7 cedis, 25 pesos. And on the 18th, there was sales, 3,400 at 10 cedis. And then 25th of October, there was purchases of 2,400 at 8 cedis. And then finally, on the 28th of October 2019, there was sale of 2,000 units for 14 cedis as a price per unit. So these are the transactions that took place for the month of October. Now, there is some additional information that we have to look at. We are told in the additional information, a physical inventory count on 31st October 2019 revealed a shortage of 200 units. So, at the end of the month, there was a shortage required. You are required to prepare the inventory ledger showing the value of cost of inventory sold and the closing inventory on the basis of perpetual inventory valuation system. Under first one is the FIFO method. That went for 6 marks. And then the weighted average method also went for 6 marks. Then the second one, II, compute the profit for the month for each method in columnar form for 3 marks. So that is it for the question. And so we are going to solve this question. We are going to use the FIFO method to find the closing stock as we did, and we are going to do this with the weighted average method as well. And then from there, we'll look at the profit statement quickly, and then we can be able to make a decision on which method will go well for management. All right. Okay, so this is the outlay of the stores ledger, and I've already given that to you in the previous video. So stores ledger, we are going to do that with the Fifo method first. Okay, so let's begin with the Fifo method. Now, we are told that the inventory balance on 1st October 2019 was 800 units at 4 cedis per unit. So 1st October, the unit price is 800, and the quantity is 800 at the unit price of 4 cedis, and that is going to give us 3,200 Ghana cedis. So that is what we have for the opening balance. That is what we have for the opening balance, and then we can now proceed to the transactions. So on 5th of October, there was a purchase of 1,200. Now, in this case, take note, the purchase is the receipt and the issues is for the sales. Now, there was a purchase of 1,200 at a unit price of 5 cedis. And so, October 5th, 1,200, the unit price is 5 cedis. So, when we multiply 1,200 by 5, we have 6,000 Ghana cedis. And when we come to the balance, okay, remember what I told you, we have to repeat the original one again. So let me give an underline for the first one to show that it is different from what we are doing. I explained to you that when you do the underlines, it gives you a perfect environment to do what you have to do. And so you have to bring the 800 at 4, 3,200 down first. And now we can now add this. This is first in, first out. So let's show each of them at their prices. 1,002 at 5 cedis for 6,000 Ghana cedis. And then we can do an underline of that as well before we are done with the second one. Please be guided. It's very, very important that we'll be able to do this. And then the next date is on the 10th. On the 10th, there was a sales of 1,005 at 8 cedis. And this is where I want you to pay attention very well. We are told that we made sales of 1,500 at 8 cedis. Now, mind you, we are doing Fifo method. And the meaning of the Fifo method is that the first that comes in should go out first. Okay? And it is basically about stock pricing. And so over here, we are basing on the pricing that came in to issue out. And so if they are telling you that sales were made at 8 cedis, do not be tempted to use 8 cedis to issue. That is not what is supposed to be done. The sales price of 8 cedi that has been given to you is not supposed to be used to do the issue. The reason why they have given you that is for the profit statement that we are going to prepare. But for the stores ledger, we focus only on the purchase prices alone. So even though they have given you 8 cedis as the sale price, please and please again, do not use the 8 cedis. So we are not going to use any of the sales prices for the stores ledger. But when we get to the profit statement, I will show you how to use that one to get your sales value. But for now, forget about. So in other words, even though they have given us sales, the unit price for the sales, ignore all the sales unit price. Assume they were not there, because in most of the questions they give you the amount or the quantity to issue out or to sell, but they don't give you the unit price. But you are able to do it because you are using the FIFO and the LIFO method. But in this case, they have given it to you. Don't be confused by that. Still do not use it. As far as the stores ledger is concerned, we don't care about the selling price. We only use what has been given to us to alternate for FIFO LIFO. So the price that came in first will go out first. But when we are doing the profit statement, we are going to use that. So we are issuing out 1,500. Forget about the 8 cedis. So the date is on the 10th, October 10th. We are issuing out 1,500. Now, if you are issuing out 1,500, look at the stock you have available. You have 800 at 4. You have 1,002 at 5. The rule says first in, first out. So it means the 800 at 4 must go out first. But you are issuing out 1,005. So you cannot issue 1,005 together. You have to first issue out the 800 at 4, so that the extra, if you issue out 800, you'll be left with 700 more to issue. And so if you take the 700 out of 1,002, you'll be left with 500. Sorry. So that is what we do from the previous video. I'm sure you understand this. So you issue out 800 at 4 for 3,200. And then finally, you issue out 700 at 5. 700 at 5 because you are issuing out 1,005. The unit should be totaling 1,005. You first took out 800. You are left with 700 to issue. So you issue that out of the 1,002. And 700 at 5 is going to give us 3,500 Ghana cedis. And that means that if you take 700 out of the 1,002, you have a balance of 500 units left at a price of 5 cedis. And that is going to be 2,500 for you at the end. And then you can do the underline. We are done with the second one as well. I'm sure it's very understandable. And then we look for the next transaction. The next one is on the 12th. There was a purchase of 1,500 units at a unit price of 6. So October 12th, 1,500 at the unit price of 6 cedis. And so when we multiply 1,005 by 6, we have 9,000 Ghana cedis. We go to the balance column. We first have to repeat the original one. So we have 500 at 5 for 2,005. And then now we have 1,500 at 6 for 9,000. And then we'll be done with that transaction as well. Very, very, very cheap. Very, very simple. And then the next thing we have to do, I'm speeding up because these things have been taught in the previous video. My focus is to teach you how to do the profit statement after the FIFO-LIFO. All right, so we move on to the next one. The next one is on the 15th, another receipt or another purchase of 1,800. So October 15th, a purchase of 1,800 at a price of 7 cedis, 25 pesos. And that is going to give us 13,050. 13,050. And so when we come to the balance, we will repeat what is originally there before we bring in this. So it's going to be 500 at 5 for 2,005. Then 1,500 at 6 for 9,000. And then finally we can bring in 1,800 at 7.25 for a total of 13,050. Then we can underline this peacefully to say we are done with that transaction. This is very simple. Now, the next date is October 18th. And that one was a sale or an issue of 3,400 at a unit price of 10. But like I told you, the unit price that is given will not be used. So the focus is on the unit, the quantity of 3,004 that we are going to issue out. So we are going to actually sell out 3,004, but we are not going to use the unit price of 10 that they gave. We are still going to go by our FIFO-LIFO method. So 3,400. We have more than enough. These two makes 2,000 plus this becomes 3,800. So we can actually issue 3,400 and we'll still be left with a balance of 400. But the problem is that they are not at the same price. They didn't come in at the same price. So you have to issue it according to the first in, first out. So you first have to issue out 500. Then next you issue out the 1,005. That will be 2,000. So that the extra 1,004 can go out of the 1,800. And so we have 500 issued out at 5, giving us 2,000. And then 1,500 at 6, giving us 9,000. So we have issued out a combined 2,000 units. So the next thing is to issue out the extra 1,400 at a price of 7.25. And then that gives us a total of 10,150. So that is how to go about this issue. We issue it as they are arranged, first in, first out. And so we'll be left with a balance of 400 at a unit price of 7 cedi, 25 pesos. And that is going to give us 2,900 Ghana cedis. Then we can peacefully underline that we are done with the transaction on the 18th. Now, the next date is on the 25th. There was a receipt or a purchase of 2,400 at 8 cedis. So October 25th, 2,400 units were bought at a unit price of 8. So 2,004 times 8 is going to give us 19,200. So we have 19,200. When we go to the balance column, there is already 400. So we have to write that first. 400 at 7 cedi, 25 pesos, giving you 2,900. And then afterwards, 2,400 will now be here written at a unit price of 8 for a total of 19,200. And then we'll be done with that as well. And this is very, very simple. I don't think that is a problem. And then finally, we look at the last transaction. The last transaction that we have was also a sale or an issue of 2,000 units at 14 cedis. The same way, the 14 cedi given will not be used for the sale. We are still going to go by our original prices. So we are issuing out 2,000 units. Okay, so that is on October 28th. We are issuing out 2,000. But you see, we don't have 2,000 together, even though we could have issued from the second one. But we don't do that. The rule is first in, first out. So we first issue out the 400 units. So 400 goes at a unit price of 7.25 for 2,900. And then once we have issued out 400, we are left with 1,006 more to issue. So that 1,006 will be taken out from the 2,004. So that is at a unit price of 8 cedis. And that is going to give us 12,800. So we'll be left with a balance of 800 from the 2004. So we have 800 at 8. And that is going to give us 6,400 Ghana cedis. So we underline that as well. So at this point, we have exhausted everything that is on the table. So there is nothing more to do. But then, in the additional information, we are told that a physical inventory count on 31st December 2019 revealed a shortage of 200 units. So even though this should have been our final closing stock of 800 at the value of 6,400, but because there was a shortage, whether they were stolen or wherever it is, we don't know. But all that we know is that there is a shortage of 200. Now, whenever you are doing this kind of topic and you see a shortage, you are supposed to treat the shortage as an issue at the last day of the month. So on 31st October, this 200 shortage should be treated as an issue. So October 31st, it's like you are selling it out. 200 units at a value of 8. And that is going to be 1,600. And that means that you'll be left with 600 units at 8, giving you 4,800. And so this 200 is the shortage that has been treated. And ladies and gentlemen, that brings us to the end of our store ledger on the Fifo. And so we can conclude that the final closing stock is 600 units at a unit price of 8 at a value of 4,800. So let us put this in mind, because this is what we are going to use for the profit statement. We are going to use the weighted average method to do the same thing and then see how the closing stock value is going to be. And then we can compare both in the profit statement. So that is it for now. Okay. Now that we are done with the FIFO method, we are going to use the weighted average method to solve the same question. And then we'll look at the value of the closing stock. Then from there, I'll teach you how to prepare the profit statement, which is the last requirement. And so, yes, the same way, it's the same information. So on October 1st, there was an opening balance of 800 units at a price of 4, and that was 3,200. So we underline that. That is the first thing we have to do before we look on to the other transactions. And then we move on. So on the October 5th, we are using the weighted average method now for the inventory ledger. There was a purchase of 1,200 for 5 cedis. So October 5th, 1,200 at a unit price of 5. And that gave us a total amount of 6,000. Now, When we get to the balance column, let's take note of something. With the FIFO method, we write 800 and then 1002 will now come. But with the LIFO method, but with the weighted average method, this is what we do. We add the quantities and then we add the amounts. So for the unit price determination, it's going to be determined by the average. So 1002 plus 800 gives us 2000 unit quantity. Then the amount of 6000 plus 3002 gives us 9200. Please watch what I'm saying. Is the amounts that I'm adding. Then from there, we find the unit price. This is how we find the unit price. We divide the amount by the quantity. So 9,200 divided by 2,000. And that is going to give us 4 cedis, 60 pesos. And that is how we go for the second one. So please, that is the change with the FIFO method. With the FIFO method, we would have written every price separately. So that when we are issuing out, we issue according to what came in first. But with the weighted average, we find an average. But this average is not a simple average. If it was a simple average, it would have been 4 cedis plus 5. So 4 plus 5 would have been 9. 9 divided by 2 would have been 4.5. So this place would have been 4.5. That is for the simple average. But with the weighted average, we don't just find the average of the price. We consider the weight of the goods that came with the price. You could see that the 5 cedi, the goods that came with it is 1,002. And 4 cedi, the goods that came with it is 800. So the weight of the 1,200 or the 5 cedis is heavier than the weight of the 4 cedis. And therefore, you will see that the average amount will be more tilted towards 5 than towards 4. And that is why it is 4.6. And please, that is how to go about it. So once you add the quantity, you add the amount, you divide, and then you are good to go. So let's look at the next transaction. The next transaction is on the 12th. On the 10th, which is a sale of 1,005. So that is an issue. So on October 10th, there was an issue of 1,005. But because it is already combined, we are not going to do any first in, first out. So we issue out 1,005 at this unit price of 4.6. That is the meaning. So we are going to issue at the prevalent and the updated weighted average price. So that is 4.6. And when we multiply 1,005 by 4.6, we are going to have 6,900. And so the balance will now be, we take out 1,005 from 2,000, we have 500 units at the same unit price of 4.6. And that is going to give us 2,300 Ghana cedis. Then we are done. So you see that, just as I did with the previous video, the weighted average method does not single out prices to separate quantities. But what we do is that as and when the goods come in, we merge them and find a weighted average price for the next issue. So whatever weighted average price we find is for the purpose of whatever next issue that we are going to do. That is the meaning. So the 1,500 that we are issuing out had a unit price of 8 cedi in the question, but we didn't use that. We are still using our prevalent weighted average price. So that is what we are doing. The next one is on the 12th. On the 12th was a purchase of 1,005 at 6 cedis. So October 12th, we brought in 1,005 at a purchase price of 6 cedis. And that gives us 9,000. So when we get to the balance, remember what I told you. Add the quantities, add the amounts, find the average for a new weighted average price. So that is what we are going to do. So 1,500 plus 500 gives us 2,000 units again. And then 9,000 plus 2,300 is 11,300. Then we find the average price. And the average price is going to be 5 cedis, 65 pesos. Then we can add that up. So that is how to go about the weighted average method. So we move on. Then the next one. All right, so the next transaction is on the 15th, which is also a purchase, which is a receipt of 1,008 at 7.25. So October 15th, 1,800. The unit price is 7.25. And when you multiply, you have 13,050. So that is going to be the purchase that we made. Now, we go to the balance to update the balance. When we are updating the balance, remember what I have taught you. Add the two quantities, add the two amounts. So 1,800 plus 2,000 gives us 3,800. And then we add 13,050 and 11,300. And that is going to give us 24,350. So to find the new updated weighted average price, you divide. And once you divide by the quantity, you have 6 cedis, 41 pesos. And then you can underline. So as and when goods are coming in, we are updating the weighted average unit price by the method that I have shown you. And that is what we are doing. And then on the 18th of October, there was another issue. So October 18th, there was an issue of 3,400. So we are selling out 3,400. But remember, we already have it in bulk here. So quantity 3,400 is going at the prevalent rate. So it even becomes easier, okay, to get the rate to issue. 6.41. And that gives us a total of 21,794. Okay, so we issue it at the recent updated rate that we have. And so we have a balance of 400 units at the same rate of 6.41. And that is going to give us 2,556. Now, sometimes if you take your calculator and you punch this by that, you may get more than this or less than that. The difference is with approximation issues. So sometimes what I do is that this amount, when I multiply and I get 21,792, I just subtract this amount from that and it gives me the total balance. That is safer because if you multiply, you may get a difference. But the marking scheme will definitely cater for approximation differences. And so definitely the most important thing is to understand what we are doing. Okay. And then after that, we are left with 2 more to go. The next one is on the 25th, which was a purchase. So on October 25th, there was a purchase, which is a receipt, at a value of 2,400. And the unit price is 8 cedis. And so we have a total of 19,200. Then we go to the balance column. As usual, we are updating. So we add the two quantities. That will be 2,800. That will be 2,800. And then we add the two amounts. And then when we add 19,200 to 2,556, we have 21,756. And so at the same way, we divide these two, we divide this by that, and we get a new unit price, which is going to be 7 cedis, 77 pesos. That is the new weighted average price. We are good to go. We are left with the last transaction, which is also an issue. So we are issuing out 2,000, sorry. So October 28th, there was an issue of 2,000. So we take out 2,000 units at the prevalent rate. So at the prevalent rate, we have 7.77. Then we multiply the two. That gives us 15,540. And so when we get to the balance, we are left with 800 units, also at the same unit price, because there has been no additional goods in. And that is going to give us 6,216 when you multiply. So that is it for that. So just like I said, we are done with the transactions in the table, but we are told in additional information there was a shortage of 200 units. So we need to issue out that shortage. So every time there is a shortage, you issue it out. So 200 is going out. The same unit price of 7.7. And that is going to give us 1,554. Okay, 1,554. So our new balance is going to be 600 units at a price of 7.77. And that is going to give us 4,662. So we are done. But you see, that is our closing stock. Anytime you are done, whether it's Fifo or LIFO, the last balance is your closing stock. Now, our opening stock was the same. Whether Fifo or LIFO, opening stock was 800 at 4. But when it came to the closing stock, we could see that Weighted average is giving us 600 at 7.7, which is 466. But remember that the FIFO, the FIFO gave us 600 at 8 for 4,800. So this is for the FIFO. And then we are getting weighted average to be 600 at 7.7. So it means that weighted average method will always report a lower closing stock than the FIFO method. And FIFO will always report a higher closing stock than the weighted average method. That is the principle, or that is the implication. Now, we are going to use these two closing stocks that we have now to prepare the profit statement for the two methods. And then we will determine which one is better, which one will give us a higher profit. And the management can stick with that. Okay, so that is it for that. I'm going to prepare the profit statement and then we'll be done with this question. All right, so finally, we are going to look at how to calculate the profit. So we are going to calculate profit. Now, in that actual fact, whether the FIFO method or LIFO method, it's just about the ascertainment of the closing stock. So the profit statement is going to be the same. The only figures that are going to change is the closing stock figures. Okay, then we'll look at which one will report a higher profit. Now, we are going to get our sales and purchases. And this is how we are going to get the sales. Remember that when we were looking at the stores ledger, I told you that the sales prices that was given in the question, 8 CD, 10 CD, 40, will not be used. But now we are going to use that to get our value of sales. So we are going to do some workings for sales. Okay, so working one is establishing your sales. And this is how to get your sales. There were 3 issues that were made. On the 10th, we made 1,005 at 8. So we are going to use those prices for sales. Look at it on your screen. You see that you have 1,005 at 8, you have 3,004 at 10, and 2,000 at 14. Those are the sales values. Okay, and those prices which we did not use for the stores ledger will now be used. So we are going to get 1,000. So the sales value is going to be 1,005 times the 8 cities. Times 8 Ghana cedis. That is going to give us 12,000 Ghana cedis. And then the second one was on the 18th. That was 3,400 at 10. So 3,400 times 10 cedis. And that is going to give us 34,000. And the final one was made on 28, 2,000 at 14 cedis. So 2,000 times 14. These are the selling price that we were given in the question, which we did not use. We are now using it to find the value of sales. So that is the purpose for giving you that. So 2,000 times 14, that is going to give us 28,000. So when we add this, we have 74,000 as the total sales. So this 74,000 is what we are going to use to calculate the profits as sales value for both weighted average and then the FIFO method. We are going to use 74,000. Then the next thing to find is your value of purchases. So working 2, purchases. The same way, we are going to multiply the quantities purchased by the prices we bought them. Okay, and so we bought 1,200 units at a price of 5 cedis. And that is going to be 6,000 Ghana cedis. Actually, we even got these ones from the work we did. 6,000 Ghana cedis. And then the next purchase we made was 1,500 at a price of 6. And that also gave us 9,000 Ghana cedis. And the next purchase we made, you can see from your screen, is 1,800 at 7.25. 1,800 at 7.25. That gave us 13,050. And the final one that we made was 2,400 at a price of 8 cedis. And that gave us 19,200. And so when we add them up, we have 47,250. So this is our total purchases. And so, ladies and gentlemen, you see that we have our total sales to be 74,000, Total purchases to be 47,250. So 47,250. And these two are going to be used for profit estimation under both methods. As for the opening stock, we already have the opening stock to be. Remember that the opening stock was 800 units. It was given at the beginning of the question at 4. That is 3,200. This is your opening stock or inventory. And then the closing stock is what we have an issue with. For the Fifo method, Fifo reported a closing stock of 600 at 8 CD, which is 4,800. And then the weighted average reported the same 600 at 7.7, which gave us 4,662. 4,662. And so these are the elements we are going to use. The sales, the purchases, the opening stock will be the same, but the closing stock will not be the same. We are going to use this value of 4,800 as a closing stock for the FIFO profit, and then the weighted average profit is going to be 4,662. That is going to be the closing stock we are going to use to estimate the profit under the weighted average. So I'm going to clean this, and I'm going to prepare both profit statements quickly for you. Okay. All right, so finally, we are going to look at the statement of profit for both methods. So we have statement of profit under FIFO method, and then statement of profit under weighted average, under the weighted average method. So let me show my currency signs. So let me begin with sales. So we have sales from our workings. Working 1 to be 7,400. It will be the same for the weighted average, 7,400 from working 1. And then we can take out our cost of sales. So we take out cost of sales. So we take out cost of sales. Now, the opening stock was 3,200 for both. Opening stock, 3,200. Then we add the purchases. Now, the value of purchases that we calculated was 47,250. So 47,250, 47,250. So that is the same for both methods. Okay, sorry, the sales is supposed to be 74,000. All right. The sales is supposed to be 74,000. Sorry. Here too. All right. So when we add the opening stock to the purchases, we have 50,450. So that will be the same here, 5450, and that is a cost of goods available for sale. Gaps. Cost of goods available for sale. Then we can take out the closing stock, and this is where the difference will appear. Closing stock. Remember that under the FIFO method, we had a closing stock of 4,800 Ghana cedis. And under the weighted average method, we had a closing stock of 4,662. So you see that the only difference in this profit statement that we are preparing is the value for closing inventory or stock. And that means that we are going to get different costs of sales. So under the FIFO method, the cost of sales under the FIFO method will be 45,650. That is the cost of sales. And then when we take that out of the sales value, we are going to get a profit, which is our gross profit. It's going to be 28,350. So this is it for the profit under the FIFO method. Now let us come to the weighted average method. We have a cost of sales of 45,788. That will be the cost of sales under the weighted average method. And when we take that out from the sales value, we are going to get a profit of 28,212. So that is your gross profit. All right, so we are done. Now, ladies and gentlemen, you can see from the two profit statements we just prepared that Fifo reported a higher profit, 28,350, than the profit of the weighted average, which is 28,212. So let us go back to the requirements of the question and see what we are. Look at the introduction. It says that Grain Dealers Limited is in business of buying farm produce in bulk from outgrowers for onward sale to manufacturers. In view of the huge volumes of receipt and sale transactions, the company is unable to use the specific pricing method for valuing inventories. The company needs advice. So you see, this is an advice question. The company needs advice on the impact of profit of using the FIFO or weighted average methods of inventory valuation. So it means that what we have to do is to advise now. Okay, so we can see that we tested both methods and realized that the FIFO gave a higher profit. So we can only advise the company to use the FIFO method because that will give them a higher profit than the weighted average method. And this for 15 marks. In fact, for both store valuation that we did and both profit statements combined becomes the 15 marks that you get in a professional exam. All right, so that is it. I'm sure your understanding is well enhanced now. If you have any other question, you can put them down there in the comment section, or you can send us a message on WhatsApp and we will do our best to attend to you. If you are new to this channel, subscribe to the channel, share this video, let others also have a benefit. Together we'll be successful, as I always say. We'll meet again another time for another video, but until then, it is bye for now.